What's going on, everyone? It looks like the weakness in the 30-year bond trickled into the equities market like I said that it would. So in today's video, we're going to go over the equities market, the bond market, and the crypto market and figure out how much lower we can actually go and what that means for the market moving forward. All right. So if you guys have enjoyed the content that I provide, if you guys like the videos that I share, please make sure to follow, to like, to comment, subscribe, put on post notifications, do all that great stuff. All right. So without further ado, thank you guys for all of your support, and let's get started with the video. So number one, let's start with the 30-year bond. Clearly you can see tons of weakness, and we've been monitoring this because it is the key driving force behind the stock market falling currently. So the 30-year bond falling like this, you know, so back here, right, when we did have multiple days of it showing huge weakness, what signaled a bit of a bottom in the market and the 30-year bond was that we came and retested these lows here and then bounced a bit, right? So that bounce in the 30-year bond was also in line with the bounce in the equities recently, right? But now we began to fall even lower than that area, and now we're in free fall mode. So I believe tomorrow we could have one more red day for the 30-year bond, similar to what happened over here. We would find some sort of support and then bounce just a bit. But I mean, looking at it in terms of extremity to the downside, right? Because before we were very overextended to the downside outside of the lower level of the B band. Okay, right now the lower level of the B band is much further away. So that is not a good sign. It means that there's tons of more room to the downside on the 30-year bond. One other thing we could look at is the RSI is now oversold, and the MACD is now a bit oversold now too. But this is not good. What we want to see in terms of the RSI and the MACD is that when there are very bearish moves, right? So for example, if a stock sharply falls, right? What we want to see in the MACD and the RSI is conversely, you know, a very sharp move to the downside. But we're not seeing that currently. You can see the MACD is barely crossing down below. You can see the RSI is also barely crossing down below. So those two things are very scary. And usually when that happens in terms of stock prices, that is not good. It basically means that we're going to have another day at least of downside. And that's why I feel like the 30-year, we're going to have another day of downside, which means if, you know, the comparison continues, then the stock market should also have a down day tomorrow. But of course, I could be wrong. And currently, today's movement could all just be, we could just chalk it up to a low volume day that, you know, a lot of banks were closed. But currently, that's what it's looking like. So here's the NASDAQ. Let's just make this very plain and simple. 358 is very important level of support. If the NASDAQ breaks that level, then I can easily see the NASDAQ coming back and retesting this zone here between 353 to 356. Because essentially, when you want to look at it in terms of trading, right? Where do you want to buy? You want to buy much closer to support, okay? You don't want to buy up here where the support is all the way down there, right? You want to go short over here at these areas, right? When, you know, the MACD is overbought, when the 30-year bond is showing so much weakness, you want to go short here, right? You don't want to go long. So that's why I'm saying that tomorrow we can have much better longing opportunities if we fall lower. So I'm looking at it in the perspective of a banker and a hedge fund, right? But then also in terms of just keeping my portfolio safe without trying to catch every single move. All right. So again, it looks like the NASDAQ can fall. It looks like that would be the most optimum like solution for everybody involved if we can just have an opportunity to buy more dips. All right. So yeah, I do believe that we will cross below 358, and most likely we will cross below 356 as well. A really good opportunity to get into longs would be around this 353 area if we can come and retest this blue trend line as well. But if we break that trend line, You see this uptrend blue channel or trend line right here. If we break that, then that is going to be a very, very safe, clear short opportunity using this level as a stop loss, right? But there is the analysis on the NASDAQ. Very plain and simple. There's not much else to really look at. Now, let's take a look at the SPY and the IWM. But if you want to stop watching the video now, feel free. But I will, you know, cover Bitcoin soon. So I think you should wait for that. Boom. All right. So the SPY, we came and reclaimed this 435.12. You can see it's the high of the day here, right? The high, 435.12. Today we came back and filled the gap and we closed below it. So that is pretty weak as well. We can come back and retest 432.72 on the SPY, and that would also coincidentally put us in the same area as the uptrend channel for the SPY, similar to the NASDAQ, right? We just need to see if we cross down below, which I do believe we could. But the closest term support on the SPY is going to be 434.50. If 434.50 breaks, then we can easily come back down here to 433, and then this 432.72 area is definitely going to come and be retested. Similar to the MACD and the RSI on the NASDAQ, you can see it's very overextended here. The 30-year bond showing tons of weakness, the equity price showing tons of weakness, and now we're basically in the middle of this zone. It doesn't give a huge, great buy opportunity, and it doesn't give a huge, great short opportunity, because we're literally like basically in the middle of both of these two areas. So that's why, in terms of trading, it would make more sense for the SPY to fall back down so that people can come back into long positions. All right, let's take a look at the IWM here. This looks absolutely terrible. So we see that it closed right above 220.19. Great, right? The 220 level is very, very important support. But the main thing I want to show you guys is that the MACD is overbought, climbing upward, yet the price of the IWM fell very sharply today. This is not bullish. There's clear divergence here, and that is not safe. It's not safe at all. So it looks like we can fall back down much lower on the IWM as well. Important support levels are going to be around 218 and 217.50 if we do fall that low. All right, that would also give a much better opportunity to buy into longs, using this as a stop loss or using this as a stop loss. So, I mean, it just gives a better opportunity to get into longs, right? And currently, tons of weakness and just makes no sense to go long currently, right? So, as we can see, all three indices look very bearish. The 30-year bond looks very bearish as well. I do think we can fall down lower just a bit, but that would give a rise and a good opportunity to get into longs. But of course, I can be completely wrong, and that all depends on the strength or weakness of the 30-year bond. All right, so there's the analysis on the stock market. Now we should go ahead and take a look at the crypto market. So yeah, today we made a lot of money on Mara calls because I'm very good at understanding Bitcoin price movement. That's basically, I mean, that's how I started trading. Back when I was younger, I traded a lot of crypto and penny stocks, but I made a lot more money on crypto back in 2016, 2017. And I just knew that Bitcoin was going to continue going on higher. We saw there was so much more upside potential in terms of the Bollinger Band. There's so much more room, right? And the other big indication is that we overextended outside of the upper level of the B band, but we consolidated and they had this stop loss wick, and we just continued going on higher. So that was the perfect formula for us to continue on Bitcoin, and it looks like we're crossing above multiple levels of resistance now. So the levels that need to break is essentially 57,600. If we can close above 57.6 on Bitcoin, then I don't see why we can't come back and retest 59 or 60,000 very, very soon. And that would be very, very good because we're holding on to December Mara calls. We took profit on the November Mara calls. I'm still holding on to the December ones. And this looks very, very good. So yeah, now the RSI is becoming a bit overbought as well on Bitcoin. But overall, Bitcoin rallying like this means that there is a huge chance that we see new all-time highs into the end of the year. So now let's take a look at Ethereum, and I want to show you guys the discrepancy of where Ethereum should be if it was basically Bitcoin, right? So Bitcoin is trading all the way up here, crossed above the 53,000 level, right? Ethereum, so basically the 53,000 level on Bitcoin equates to 39.50 on Ethereum. But Ethereum, as you can see, you know, on Bitcoin, we're close to the 1.68% fib level here, right? If Ethereum catches up, Ethereum should be trading at around 4,200 at least, and we can see that it's $700 away from that. So there's tons of more room for the altcoins, for the crypto markets in general, especially since Bitcoin is showing so much strength. All right, so I hope you guys enjoyed the video. I tried to make it condensed and just get straight to the point. If you guys enjoyed it, please make sure to follow, to subscribe, put on post notifications, and please let me know if you have any questions about anything. I would love to help. All right, and I will see you guys tomorrow. Make sure to follow me on Twitter. I share all of my trades and plays, everything completely for free. All right, so yeah, I will see you guys tomorrow. Thank you. Have a great day.